The pressure on the market continues, and it's going to be the same thing this week. However, we are very close to flushing to the key level that if we do, it could set the market up for the next leg higher in this bull run. I'm going to talk about all that and more in today's Sunday setup. So let's begin the Sunday setup by taking a look at the March calendar. We'll get into the data here in a second. We're actually going to go to TradingView for that because we've had some changes and adjustments still coming out of that government shutdown. But what I wanted to point to here, a few things. One being that both Tuesday and Wednesday are bullish sentiment days related to seasonality from the Stock Traders Almanac. So just keep that in mind. And we also are getting a new futures contract on the 17th. So make sure that you have taken note of that. We've got 2 more full weeks left here in March to trade, followed by 2 days to finish out the month on the 30th and 31st. So we are at the halfway point in March. And how about earnings? Well, the bulk of the most important reports are over, and it won't be until the middle of April when we'll start getting the big boys reporting again, kicking off with Netflix, and then we'll get back into the Mag 9. And one thing that I do want to note here is a lot of the companies who reported strong results had big moves higher after their reports. But what we've seen time and time again in this earnings round is those pops were sold off. They are not sticking. So just something to keep in mind. And if we're looking this week in terms of earnings reports that I'm interested in seeing, Lululemon here, Lulu, ticker symbol LULU, Tuesday after close. We'll be interested to see how they report. And then coming over here on Wednesday, it's going to be the big one here, MU Micron. This has been the stock of 2026. We're going to look at that chart here in a little bit, but they are going to be reporting, and I do think there's a possibility that this thing can just continue to rip higher because it has been so strong. And then when you head over to Thursday, retail is a fan of trading BABA, B-A-B-A. So they're going to be reporting before open. And then at close, one report I do want to see is FedEx, FDX, ticker symbol. That's going to be an interesting one. So that's what I have my eyes on this week in terms of earnings. And ultimately, it's a snoozer if you ask me, but I am interested in Micron, and I will have an earnings preview video coming here on Tuesday. And now let's take a look at the data that we're going to get the week of March 16th. And there's definitely something of interest here that we are going to want to pay attention to. And that is going to be Wednesday, March 18th. And for a few reasons. Number one, we are going to get PPI, the producer price index, coming in at 8:30 a.m. It's expected to come in at 0.3. Prior, it was 0.5. We know how these inflation reports work. If they're cool, the market will typically get a spike. If they're hot, we can get some more pressure to the downside. And with the inflationary concerns as a result of this U.S. versus Iran war, any hot inflation report is not going to be received well from the markets. But that is not the most interesting thing here on Wednesday. It is going to be right here, the Fed interest rate decision coming at 2 p.m. We are also getting a dot plot, which we're probably going to see less rate cuts expected this year. And then Papa P will be speaking at 2:30 p.m. Eastern time. That will be live stream here on the channel. I hope that you will join me. I'm guessing Powell is going to be hawkish and talk about how this jump in oil prices as a result of the U.S.-Iran conflict makes things a little bit more murky. There's going to be uncertainty. So we could see a highly volatile day on Wednesday. And just think, this is one of Papa P's few remaining pressers left. I think he's got one more after this, and that's it. So we've got to enjoy these while they're still here. And then just taking a look at the rest of the data, nothing else that we really want to talk about. On Saturday, Powell will be speaking again. And then just keep in mind on Friday, that is option expiration day. So that's going to be pretty significant. We can see some bold moves, but this way you are up to date in terms of where we are with the data. All right, and now let's jump into it. And like I said at the beginning of this video, this could be the week that we get the flush that is needed for valuations to reset, for investors to feel ready to get back into this market. And here's the thing, this war is putting pressure to the downside on everything. We are seeing it, except for crypto, and we'll take a look at the charts on that here in a minute. But if we take a look at the SPX from the all-time highs to where we currently are, we are down 5.4%. And you can see that we are very close to that 200-day simple moving average. Now, as things escalate, if they do continue to escalate between the United States and Iran, if we're seeing intensification in terms of the attacks, if we're seeing an escalation in the rhetoric between both of these countries, we are going to see more downside. If we see the Strait of Hormuz restricted in terms of tankers being able to export oil, then we're going to see oil spike and we are going to see stocks fall. And what hasn't happened yet, we have not touched this 200, and there is a good chance that we could open below it this evening when futures open. Let's say that some type of report comes out, a new attack that has occurred, we can open below this 200. And the challenge is, if you come below this 200, now any type of rally that you get into the 200, it's going to serve as a resistance. And that's going to be difficult for the bulls to push it through. And this can start the downside move to a 10% correction, which is desperately needed in this market. The market has not pulled back 10%. You have to go back to April of last year, but that would be a significant move to the downside in this market where things would reset themselves in terms of valuations, especially big tech. And I think at that point, you would see institutions willing to step back in and buy the dip. Now, keep in mind, just because big tech is down, and really that's what's holding this thing from shooting up into 7,000 or higher. If big tech starts participating again, we can see new highs in this market. And we just haven't seen that. Really, October is where everything peaked and we've just been trading inside of a range, but we do need to get that 10% correction, and quite possibly we can come lower than that. We also have an unfilled gap down here at 60.29, and that would take us back to a gap up that we had on June 23rd. So we want to watch those levels. Now, it's not just going to be a straight shot down here to a 10% correction, which would take us to about 63.0210. My guess is that we're going to see things get heightened before they get resolved. And so look for some more downside movement. But the key thing is, the sooner that you can get down to 10%, I do think you will see lots of buyers stepping in at this area to push things back up. Because here's the thing, if you take war out of the equation and you look at all the other components of this market, liquidity, the Fed being in a position to lower rates, all those things were still on the table up until this conflict between Iran and the US. So once this is resolved, this is going to be a good buying point for people to step back in. And I believe that will take us to our next rallying point. So just keep an eye on that. We'll probably will. I wouldn't be surprised if we do come down into that 200, even poke our heads a little bit below it. If we do get some buying and a rally above that 200, just briefly before rolling back over, I would not be surprised by that, because there are probably several buy orders set for the 200 simple moving average on the daily. So just to keep an eye on that. But I'm looking for this dump to 10% and for the push higher to come out of that. Now, let's just continue to go through the rest of the broader markets here. All right, let's take a look at the Qs here. And we can see that we're just been moving sideways. It looks like there's support here in this area. And I am intrigued by the bullish volume that has been coming in here since February 13th. We have had some spikes here. And we did see the bear step in these last 4 days. We've had 4 red days in a row. But I do think that there is interest in tech. I do think people are buying here. We are very close to that 200. We're probably going to be seeing some buying come in off of that. But if we just stretch this out, you could see that right where a 10% correction is at 572.41 is also where that 50 simple moving average is on the weekly. So if we do break below that 200, keep an eye on that area for a bouncing point for the Qs to start moving higher. And again, it's the Qs that are going to have to participate and run if we're going to see the next leg up in the market. But I do think that it has to flush first along with the SPX. So watch again for some buying to come in here at the 200, a little bit of a relief rally, and then a roll over. And let's see if we can hit that 10% drop, that 50 SMA on the weekly as well by the end of the week. Taking a look at the Dow Jones Industrial, this one has had a precipitous fall, but you're seeing a pattern and trend here on these charts of the broader markets, and that is they are all meeting at the 200-day simple moving average. Very close to touching it here. Again, I expect buyers to come in at this level. You could see a 10% correction on the DIA will be at 454.49, and notice that we are oversold on the RSI, and this one has fallen pretty quickly after a big push higher. Nice little reset here. Let's see what happens when it touches the 200. Let's take a look here at the IWM, and this one has already corrected 10%. On Monday, we had that big flush lower. You could see buyers stepped in right at 10%. I think you will see something very similar fashion on the other broader indices when that area is hit. But you could see that we closed with a bearish candle here on Friday. We are not oversold on the RSI yet. And in fact, we took out the low from Thursday. There's more room to the downside here on the IWM, especially if there are inflationary fears from the war. And again, the 200 is right here. So let's see if the IWM wants to come down and test that area. And then you have Bitcoin, which surprisingly, we've had 6 green days consecutively. Right now, at the time that I'm recording this, Bitcoin is in the green, up 150 points. That doesn't mean anything. We know that this thing could flush. And all that it takes is one headline with the war to just send this thing down. But for right now, Bitcoin is hanging in there. The rest of the crypto markets are hanging in there. It's interesting to see that. And from a technical perspective, we're sitting right here on the 50. You can see when it poked its head above it on Friday, it got rejected hard. It's trying to get back above there. And you could see that once it gets above that 50, at least on the daily, there's no resistance up to 87.03. If we hop over here to the weekly, you can see that you have your 10-day EMA, your 10 EMA on the weekly at 74.659. That's an area where we've been rejected before, but above that, it does have room up to 87.376, which is your weekly 100 simple moving average. So keep an eye on Bitcoin. It has been an outlier here with weakness and everything else. Taking a look at the Hang Seng Index, this is the Chinese stock market. Head and shoulders pattern, retested the neckline, and it closed below the 200 here on Friday. Let's see if this thing wants to sell down a little bit more, but that's just a beautiful textbook head and shoulder pattern, weakness there in overseas market. TLT, after the big bang higher, people are done buying bonds, which is interesting. And it looks like we're about to get another death cross here. Keep an eye on this. We're back down. And when people sell their bonds, what does that do? It jacks up the 10-year yield to attract buyers. And so we could see that we were back above all the moving averages here on the 10-year, and it was trading at 4.283 on Friday. Let's see if this thing wants to climb a little bit higher. The reason people are dumping bonds right now is because of inflation. And if inflation does go up, they're going to be able to get a higher yield. So they'll wait for that yield to go higher before they want to get into bonds. And then we take a look at the dollar. This thing is ripping all those higher lows. Bang, 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 bang. Smash, pushed up. And this thing is just moving up. That's a strong move. It looks like that 50 is about to cross over the 200. That would be a golden cross. And when's the last time that happened? We did see it happen here a little bit on a pop. It didn't hold on. It dropped off a cliff from there. But the last time we had a strong move above the 200 with the 50, we'd have to go back to November of 2024. And that was a big push up into January of 2025. Remember, a stronger dollar is not good for stocks. It puts pressure on stocks to the downside. So keep an eye on what happens with the dollar. And the mighty VIX, we have these higher lows building here. We had the big VIX spike up to 35.27. That volatility got sucked out of the market, bang down to the 10. And we closed with this hammerish type candle on the VIX here on Friday. Let's see what happens. My spidey senses tell me that we're not done seeing a spike here on the VIX, and we probably could see 40 before it's all said and done with. But let's see how we are going to open here on Monday. And then taking a look at gold. People are not coming into this as a flight to safety, which is interesting. I thought we'd see a little bit more of a bid here, but we are below the 10. Let's see if we want to come down and retest this 50, or if not, like what it did here back at the beginning of February, where buyers stepped in when it did hit the 50. Let's see if it wants to break through this time. There is thin volume here on the VRVP down to 140, and that takes us to that 100-day simple moving average. So let's see what happens with gold. All right, so now let's take a look at some individual tickers here. I'm going to go through the mags. First, we're going to start with good old Tessie. Big old double top here. We are at the neckline, which just so happens to be at the 200. It's hanging on right here. You are seeing the volume really, it is declining. And that's something that I noticed too. Volume is declining on most things, especially in big tech. But you wonder if there is a flip in sentiment in the market, if this is an area where people want to step in and buy. But you also have this unfilled gap down here, 368.73, which would be an ideal place for buyers to step in. As of right now, from this recent high that we hit down to the most recent low, Tesla's down 23.59%, $117.72. It's down, but not, it hasn't been crushed. So there can definitely still be some more room to the downside here. There is some new news that came out over the weekend. Musk says Tesla's mega AI chip fab project to launch in 7 days. This came out on Saturday. Musk said on Saturday that the company's Terafab project to make artificial intelligence chips will launch in 7 days. Musk had said last year that Tesla probably will build a gigantic chip fabrication, that's what fab means, to make artificial intelligence chips. See if that has any impact on this ticker here on Monday. Coming over to Google, head and shoulders pattern. Very much a textbook head and shoulders pattern, and we are below the 100 right now. We are below the 10, and you can see how that 100 functioned as a resistance here. And check this out. There's not much here. Holding this thing up, thin volume on the VRVP and an unfilled gap down here at 262.40. Let's see if we see rotation out of Google into other tickers. Taking a look at Microsoft. Don't look now, but you do have an inverted head and shoulders down here at support. And these are the lows where Microsoft was trading last year. Let's see if this thing wants to pop out here. Look, I'm just looking at this now. It almost looks like I drew like if I did like a circle here, it's like a sleeping baby face. You see that? Maybe it's just me. Anyway, inverted head and shoulders right below the point of control here, this major volume nodes. The volume is declining here from the bears. Can this thing get a bid? Can it push? It is beat up pretty significantly if we measure from this high that it hit on July 31st down to its low, 31.19%, $173. So 30%, it could come lower. It really could. You do have this unfilled gap down here at 368.14, but just keep an eye on this inverted head and shoulders pattern that we're seeing here on Microsoft. And we take a look at Netflix. I love this Netflix chart right here after that big gap up whenever they pulled out of the Warner Brothers deal. Nice little retracement into the 10, and you can see this 100 here is the resistance sitting on the point of control. This large volume, though, is that thing is getting squeezed and it could pop out of here. I would not be surprised. And let's see if it wants to tag that unfilled gap at 107.50. And look right above there, you have the 200. Interesting how these things line up. If it could break above both of those, you've got room up to 120.92. I wouldn't be surprised to see Netflix to start moving. Just from my experience, Netflix after market weakness tends to be a front runner in terms of indicating when things are going to start pushing higher. So keep an eye on that. And it's never too early to begin thinking about the next round of earnings. Netflix is going to be reporting on April 16th, and I can't wait. That's going to be fun. And then we take a look at NVIDIA. And I mentioned to my community last week, or excuse me, this weekend, whenever I was charting, this thing has been sideways since July. And isn't it interesting that with all the weakness that we see in the market, NVIDIA is still hanging in there? And this is intriguing to me. And I'm actually going to start doing some weekly analysis here of NVIDIA, but they're not dumping this thing more than what I thought they would have. And so the fact that this is holding strong, holding in here, even if it does dump a bit, here I have marked out where the 50 simple moving average on the weekly is. This would be an area where I really think you'd see buyers step in. This is a price area that we were back in September. But the fact that it's held in here as strong as it has tells me, or at least gives me an indication that investors think that this is fairly valued and there could be more upside here. You can see that it's hit the 200 twice. I really want to study this chart a little bit more because I do think there could be something here, but that's just very intriguing to me. I am going to be watching this 50 simple moving average on the weekly. Keep an eye on NVIDIA. Amazon, we are making higher lows here. We still do have an unfilled gap at 194.57. Is this just a little bit of a flag before the next leg lower, before we fill this gap? And we're going to do the same thing because you do have another unfilled gap down here at 176.84. Who knows? But we do have a death cross here on the daily with the 50 below the 200. Not looking too good there for Amazon. And then taking a look at Broadcom. Again, most of these companies who are reporting nicely with earnings, nice gap up, nice big move up, got above the 100. And then what happens? Schmack, right down. We're below the 200. It's still showing higher lows, but that's a big old bearish engulfing candle, uptick in volume. Keep an eye on this one if it wants to come lower, but it just can't hold on to any strength here. Let's see what wants to happen with Avgo. And then Apple, man, I got my tickers all mixed up here. HIMS is definitely not in the Mag 9. What in the world? Hold on, let me move this down here. Let's check out Apple. So Apple, we had this head and shoulders pattern. It dropped, it came down and filled the gap. Or excuse me, didn't. All right, Apple, we had this head and shoulders pattern, bang, bang, bang. It dropped, pushed back up, double top came in, big bearish engulfing candle here on Friday, super close to filling this gap that came in on January 23rd. And you have the 200 that is sitting down there at 245.58. Again, if we get that big flush this week that I think is possible, I think you will see buyers come in at that major support level of the 200. So keep an eye on that. And then there's Meta. Again, we saw some news come in on Meta this week here. And then we saw some news come in on Meta that they're delaying their AI model. Avocado is the name of it. There's lawsuits against it. They're going to be laying off, I think, 20% of their workforce. So lots of negative headlines, but we've broken this supportive trend line and we are getting dangerously close here to taking out these most recent lows from January 20th. And if that happens, all bets are off about taking the lows out from November off of the big gap down on earnings. And so just keep an eye on that. And also too, take note of this. We still have gaps to fill on Meta from last year. This one's from May at 550. You also have another gap down here at 507.20. So things could get sketchy if we start taking out these lows and we get weakness in the market. So just be ready. But again, this is a solid company. If it does come down here, I'm going to add to a longer term position in my portfolio because I am a fan of Meta stock. We'll see what happens here, but that is not looking good. And a shout out to Scott, who pointed this out on the weekly, this big old head and shoulders pattern here. So do or die time for Meta. You better get it. You better get it going here, man, or it is not going to look good. And then just taking a look at some other tickers here of interest. Boeing was looking very strong there for a period of time when it got above that 100 monthly simple moving average, but it couldn't hold it. Then you had this textbook double top come in, drop down below all the moving averages, but did find some support on this trend line here on Friday. And you had a bullish Harami with this candle in here. I wouldn't be surprised to see a gap up, fill this gap here to 213.77. So watching Boeing there. And then the crypto stocks, again, with Bitcoin showing a bit of strength, I am watching Coinbase here. We had that inverted head and shoulders pattern. It tried to get above that 50, kind of coin is doing. If it can push out of here, you have room up to this 100-day simple moving average at 241.36. So there could be some nice day trade opportunities there as well. And then when you look at CRCL, this is another one. This one just IPO'd back in June, and this had some monster rips when it first came out. But again, above all those moving averages, would like to see this one come down and retest into the 10. You do have an unfilled gap at 212.75. Again, this thing could run and pump hard if it gets going, so just keep an eye on that one. And then two others want to take a look at. UNH, is this just a bear flag before the next move down, or are we setting higher lows here and this thing's getting ready to pop? We do have room up here to the 50 at 304.22, and this thing has been beat up so bad. If you just go back to its all-time high to its lows, let's measure this out, 62%. So this thing is still in a bearish trend, but I will say this, once it recovers all those moving averages and starts building out some strength above these large volume nodes here on the VRVP, this one could absolutely rip. So definitely keep an eye on UNH. And then lastly, MU. Very intrigued here. This one has been the stock of 2026, and they are going to be reporting earnings here on Wednesday. Here's the thing about MU and all other memory chip companies right now is there is such a demand for it that they can't keep up with the demand. And supply demand, we know how that works out. So I would not be surprised to see monster numbers reported in their earnings call and to see this one blast off on the report and shoot higher. So keep an eye on MU. I'll have an earnings report analysis coming on Tuesday for this company, but definitely excited to see what they have to report. And then we're going to take a look at two last tickers, one being Oracle, because we did an earnings preview video here for Oracle. And again, they had a nice move up on earnings. They got up to around 172 and got rejected like most things this earnings season. Now they're back down to the 10. I told you guys that if it got down to 128, I would initiate a position, but it couldn't hold on to any strength there. We're seeing continued downside pressure. We're seeing an uptick here in the bearish volume. And then the last one that we'll take a look at is Adobe. And here we go. Look at this. We thought that this one potentially could have had a decent move off of its earnings report. And what happened? It gapped down. I had said that spot to look at for a bearish move off earnings would be 256.77. And it actually touched that price with its high of the day there, but it gapped down hard because their CEO said that he was leaving the company. He was waiting for the successor to be found before he departs. And so that was not news that shareholders wanted to hear, and back down it went. But at some point, you would think if this company can adapt and find a way to show that AI is not going to kill its company, that it's in fact going to make it stronger if they hire a new CEO, that there could be some value here for Adobe. And really keep an eye on software, the software across the board. Not all these companies are going to die because of AI. I think that's an overblown fear. it's just going to force them to innovate and show how they are still going to provide value. Because here's the thing, at the end of the day, you still need human beings to utilize the artificial intelligence. Unless we just want to give free reign to the robots to run this world, which is a very concerning thing that I don't think we want to go that direction, you're going to need that human oversight. Keep an eye on Adobe here. I'm going to start following this just because, again, this thing is so beat up. Maybe it will provide some opportunity. So there you have it. The Sunday setup is complete. It is going to be a fun week. Again, we are still going to see pressure to the downside, but we need to get that flush to 10% on the SPX, on the Qs, and we will see buyers step in because we haven't had that big of a drop to the downside. You'd have to go back to April of last year. Expect some buying to come in at the 200 because we're close on a lot of these broader markets. You will see a bounce there. The question will be, is that enough of a dip for investors to be willing to step back in? And with the concerns of the war, I think you're going to see a relief bounce and a drop lower. We'll get that flush 10%, and then it could be game on for the bulls moving forward. Don't forget, on Wednesday, I will be live streaming the Papa P presser. So I hope that you will join me for that. And I appreciate your support of the channel. I love the stock market, guys. I love trading. I love talking about the market. So let me know, what is your best setup for this week? What are you looking forward to the most? I would love to hear that. Smash that subscribe button on your way out. And most importantly, make it a great day. Honor the moment. And as always, be grateful. Take care, everyone.